Insolvent nations tend to have a very bad relationship with the currency and a very bad relationship with gold. Gold is the true revealer of how well a nation is doing with its stability. And we're doing a very poor job of it. So I expect gold. Listen, if you ask me, if Bitcoin, which is a 64 bit private key, which has letters and numbers in it that exists virtually, uh, if that could be $60,000 a unit, then gold could be $5,000 or $6,000 an ounce.
Gold prices extended their record run on Tuesday, holding firm above the key $2,500 level, driven by a weaker dollar and growing investor confidence that the Federal Reserve will likely cut interest rates in September. Gold is up 22% so far in 2024. Michael Pento of Pento Portfolio Strategies shares the potential for gold to rise to $5,000 or $6,000 per ounce. Pento warns that if the Fed cuts by 200 to 300 basis points, it would be a sign of panic, indicating chaos in both the markets and the economy. He also notes that the stock market is priced for perfection. Despite the economic challenges ahead, markets anticipate that the Federal Reserve will reduce its target interest rate by 0.25 percentage points to a range of 5% to 5.25%. Investors are keenly awaiting a speech by Fed Chair Jerome Powell this Friday at the Jackson Hole Resort in Wyoming for any indications that the rate-setting committee is inclined to make this cut at their upcoming meeting on September 18th. Meanwhile, other major central banks have already begun lowering interest rates. The European Central Bank made a cut in June, and the Bank of England followed suit earlier this month. The Bank of England's reduction of the base rate to 5% is already leading to more affordable home loan options for some mortgage borrowers, with 7 of the UK's 10 largest lenders now offering fixed-rate deals below 4%. Pento doubts the Fed's ability to effectively combat inflation without causing severe damage to the economy. Given the Fed's history of rate cuts in response to crises, Pento predicts that inflation will become an intractable issue, making gold a crucial asset in any portfolio, both during the upcoming recession and especially afterward. Before we explore further, be sure to subscribe and click the bell to stay tuned for more engaging content.
The market has priced in a 150 basis point reduction cycle happening very quickly. And they would only surprise the market by doing that and going more than that, going over that in the context of a market that is an economy that's in a recession. So, if they do cut by 200 or 300 basis points, I can assure you that's a panic move. It's in the context of chaos in the markets and in the economy, and you're not going to be happy just being your 60-40 investor. It won't be good news. So like I said, the Fed is going to be following the market lower. So that's why you see bad news is just bad news now. Bad news is bad news. There's bad news. Listen, the Fed is still above its target. It cannot panic and cut rates because we still have an inflation problem. And panic rate cuts aren't happening unless we have complete turmoil in the economy. And you can't have 14% earnings growth when you have a recession and the economy and markets are in turmoil. So something's got to give here. And the stock market is priced to perfection, in my opinion. There are certain sectors I'm invested in. It's bond and bond proxies. That's what we have in sector 2, which is disinflation. We have gold. We have bonds, short-term government bonds going out about 3 years on the yield curve. We don't want long. I don't really want long duration because at 3.8%, I don't think it can go much lower or for very long. Could go lower, but not for very long. Because in response to a $6 trillion deficit, I don't think long-term rates are going to stay that. And if the Fed comes up with helicopter money and the Treasury come up with helicopter money again, I don't think inflation is going to stay at 2.5%, 3%. It's going to go back to 10 and double. It's going to go to double digits. In reality, much higher. And who knows when it's going to end? Who's going to ever believe the Fed that they're actually going to go and start fighting inflation and prosecuting and vanquishing that goal and conquering inflation? I don't think it's going to happen. Who's going to believe them? It's going to be clear. The Fed cut rates to 0%, actually 1%, because we had a NASDAQ bubble crash. Then they cut them to 0% because we had a crash in the real estate market. All one-time, once-in-a-lifetime events. Then we had a once-in-a-lifetime pandemic, and the Fed went back to zero. If we have another crisis, I don't care what it is, even if it's another pandemic, people are going to make the conclusion, listen, pandemics are happening all the time. People are going to say economic debacles and crises are happening all the time. And the Fed cannot ever adequately fight inflation without destroying the economy. So inflation is going to run intractable. That's my opinion. And that's why I think gold is going to be a very important part of anybody's portfolio, both heading into this recession and especially after the recession.
The dollar index has declined by 0.36%, reaching a 7.5-month low. The dollar is under pressure due to dovish remarks from San Francisco Fed President Daly and Minneapolis Fed President Kashkari, who indicated they might support a rate cut at the upcoming September FOMC meeting. Additionally, central bank divergence has strengthened the yen, pushing it to a 1.5-week high against the dollar, driven by expectations that the Fed will start cutting rates next month, while the Bank of Japan is anticipated to continue raising rates. The dollar's losses were further extended after U.S. July leading indicators fell more than expected. Pento argues that the United States is increasingly resembling an insolvent nation, which typically struggles to maintain the value of its currency and has a strained relationship with gold. He views gold as the ultimate indicator of a nation's financial stability, and by this standard, the U.S. is performing poorly. Now let's delve into the video.
Gold is falling nominal and real interest rates. That's what gold is most concerned of. And you see that the rates are falling. Rates have crashed. The long-term rates have crashed. So gold actually absolutely loves that. I think the next leg is a recession. That'll take rates a little bit lower on the long end, a lot lower on the short end, because I think the Fed funds rate could go to 2%. Right now, the 2-year note is over 4%. So that's wonderful. But you hit the nail on the head when you asked me the question. You said, is the United States an insolvent country? Insolvent nations tend to have a very bad relationship with a currency and a very bad relationship with gold. Gold is the true revealer of how well a nation is doing with its stability. And we're doing a very poor job of it. So I expect gold. Listen, if you ask me if Bitcoin, which is a 64-bit private key, which has letters and numbers in it that exists virtually, if that could be $60,000 a unit, then gold could be $5,000 or $6,000 an ounce. You could say the economy is horrible, but we're in hyperinflation, and if you short the market, you're going to be crushed because markets go up in hyperinflation. So you need to know where we are in terms of inflation, and especially in the context of inflation, in the context of growth, and then in those 5 sectors so it's deflation, disinflation, stasis, reflation, and stagflation, or hyperinflation. And then you'll know every single investment bucket has its own investment style. Sometimes it's wonderful for gold, and sometimes it's horrible. Gold hates reflation because rates are rising and the economy's doing well in sector 4. You can get killed, but in sector 2 and in 1, you can make a lot of money in gold because gold loves, like I said, falling nominal and real interest rates. So, and maybe even sector 5, gold should do fantastic. And I think because real rates, even though rates will be rising, nominal rates will be rising, in real terms, they should be lagging inflation. So, and if that's the case, that's the actual best environment for gold. I think the US dollar, and I'm not just talking about so much against other flawed fiat currencies, because that's not how you measure a currency. You measure a currency against gold. You want to look at a chart, put up the Japanese yen against gold up until a few weeks ago. I think the dollar crashes against the price of gold. Crashes. It's been doing so, and I think that could accelerate after the recession. The money markets are frozen. You can't float commercial paper. There's no transactions in the repo market. They're dysfunctional if there's any at all. And we have to launch some kind of ZERP, QE, and helicopter money regime once again. I think the dollar crashes, especially against hard assets.
Gold prices have eased from recent record highs as investors await the Federal Reserve's next move. On Wednesday, August 21st, spot gold traded slightly higher at $2,517 per ounce, following an all-time high of $2,531.60 on Tuesday. With these recent fluctuations, investors might be questioning whether now is the right time to invest in gold. Although gold has demonstrated strong performance and continues to be a reliable hedge against economic uncertainty, it's crucial to evaluate individual investment goals and risk tolerance before making any decisions. Given the recent all-time highs, is it too late to invest in gold, or is there still potential for further gains? Your opinion matters. Drop your thoughts in the comments, hit the like button if you enjoyed this, and subscribe to stay informed on our journey together.